Here beforehand. Did anyone buy a copy of the book at all? No, shame on you. That's okay. You did. Wait, okay. So, you know what? I actually really love this book, and I think it makes a great present if you've got any mates that are retired geologists. Oh, Tom got his signed by the author. What did that? Did he charge you an extra $2 for that now? No? You could sell it to someone here and get $2. If he's left already, there'll be a shortage of these. It's like lithium, supply and demand, mate. What have you got there? So it is Rocks in Our Head, stories of exploring for mineral deposits in exotic lands. Blokes' points of view, women's points of view. What are you doing there? Are you bored yet? You're not. Have you made some money this morning? You're with the government. People, there's someone here with the government. What's your name? Mark Fleming, Department of Mines, Industry, Regulation and Safety. Have you made any pertinent observations today, Mark Fleming?
Very much so, yeah. Actually, all the projects are very good.
He's playing it straight like a good government bloke.
No, I love the projects. Yeah. I want to see more mining.
Although I have a feeling, just by watching and observing you, Mr. Fleming, that you would have a bit of a wicked side on you. The man's wearing a diamond earring, so I think he's like, there you go. Oh, should I retreat to this stage? What was that?
It might be a zircon, you know.
It may well be. We're all rare earths, so anyone can tell they're diamonds here. We'll have a little look at it. All right, I'm going to leave you alone because it's very unkind of me and everyone else around is getting a little bit worried. Guys, did you enjoy your lunch? Yes? I unfortunately started backwards and didn't get to the main, so I've had the sticky day pudding twice now, so I'm pretty stoked at this point in time. All right, we have 6 more presenters to get through in this particular segment, and we're going to start with Valor Resources. Now, let me arc up this computer for us. George Bork is the Executive Chairman of Valor Resources. He's been in this space that we're talking about today for the last 15 years. He suffered the slings and the arrows. He's suffered the barbs and the jibes of his colleagues, but now he is the man who is laughing. The last 10 years he spent at Northern Minerals producing heavy rare earths. In October last year, he was offered a little opportunity with Valor. He liked the look of it. He took it, and he's here today to convince you to taking the same leap of faith and perhaps investing with them. Would you please make him very welcome?
Thanks, Christy. Thank you, everyone. And thanks to the team at Vertical Events for putting this show on. Interesting how this probably started off as a uranium conference and slowly built legs to be what it is today. But as the intro said, a lot of people laughed at me for 10 years of working within the rare earth industry, and now, as Eddie Rigg puts it, it's part of the new age commodities. And we're very blessed in Western Australia, at least, to have a lot of them, but I won't be talking about Western Australia today. I joined this company in October, and it was originally a copper project in Peru, but we put in some assets from the Athabasca Basin in Canada. And it's wonderful that we've now got 2 projects to talk about. Disclaimer. So why Valor? I've been associated with uranium for about 20 years. First started off associated with it at Olympic Dam, went off to Africa, US, Australia, had a break for 10 years and back into it. And it's really interesting when you're starting to listen to the topics and conversations, and everyone's been talking about the electrification of the vehicle. And now it's starting to look at what's powering the vehicle, what's the source of the charge going into the electric vehicle. And it's great that uranium is now starting to be a topic that everyone's talking about being the base load. So it's all about this global net zero carbon emission target that we are all working towards. We have 2 outstanding projects, and I'll go through the big numbers that are on there and in our booth a bit later on. Great board and management team. Myself and Robin Wilson took a rock chip at Northern Minerals Browns Range and put it into production about 7 or 8 years later. So we've got a track record of being able to take projects through the entire process. And I'll talk about some of the other guys a bit later. Here it is. So been around for 30 years. And then I've got Gary Billingsley, and Gary's a great help to me from a Canadian perspective because he actually lives in Saskatoon. He's been in the rare earth industry and uranium for 40 years, And during COVID times, nothing beats having one of your directors living in the state where you're operating and exploring for, so it really makes life a lot easier. Our management team, as I mentioned before, we're slowly building on this as we progress and develop our company, but Robin Wilson's here and at the booth if you want to come and talk a bit later on. Robin's got a wealth of experience in gold, uranium and rare earths, and is overseeing the 2 projects in Peru and Canada. Johnny Vargas is our geologist on the ground in Peru, and we're using a consulting group at the moment in Canada. One of the big challenges we face, not only in Western Australia and Canada, is the shortage of geologists. And so whilst everyone gets excited and wants to see these assets progressed, the challenge a lot of my peers have is trying to get people on the ground and progress these projects. Just take a couple of points, and Eddie Rigg mentioned it at the outset today. Spot price has gone over $40 a pound. It's highest in the last 6 years. For some that were investing back in the late 2000s, we saw the price go to $130 a pound in the spot market. I think what's more important is starting to see the trend of long-term contract prices rising, which is where most of uranium is sold. Again, I mentioned it at the outset, but the conversation is now moving from not just about the actual electric vehicle and what type of battery chemistry people are looking at when it comes to lithium technologies, but it's also now having a look at what the base load and what is the mix of energy that people are plugging into to get their cars powered. And electric vehicle in France versus an electric vehicle in China will have different outcomes and benefits to society based on the mix of energy that goes into the wall. And I think we've all seen the benefits of uranium in terms of footprints and electric carbon emissions. Why the Athabasca Basin? Historically, the Athabasca Basin has produced uranium at a grade greater than 2%. It is the highest grade uranium globally. A bit of trivia. Saskatchewan became a communist state or a socialist state back in the 1980s. And we started to see the privatisation, or they made it public, of the potash industry, and a lot of the uranium assets were taken from the public. It was then brought into Cameco, and then we've seen recently that the potash assets have come into BHP. A lot of people walked away from Saskatchewan in the late 80s, and we haven't seen a lot of work done there for a long period of time. So a lot of the historical data around this area almost stopped and came off a cliff in the 80s. And people just abandoned it because they were worried about sovereign risk. And it's only in recent times people are going back there. And whilst the boom's happening today, the assets we've put together in Valor were put together back in February last year. And we actually pegged some ground in the last few months up in the Athabasca Basin because it hasn't had probably the pegging rage that we've seen in Western Australia, for example. So it's interesting when you go back through the history of that particular district. It's favourable from a local Indigenous perspective. They're very supportive of the uranium industry and work very closely with companies like ourselves and others, and many are working for likes of Cameco. So our main project in the Athabasca Basin is the Hook Lake project, where we're earning in up to 80% with a NSR. We've got 16 continuous claims. There's been some historical work done on it, a lot of data we're going through. Since we've picked it up and started working in March, we've done a number of airborne surveys. We've done a detailed radiometric survey to the northern part of the project. And we've finally been able to get boots on ground about a month ago to follow up on some of the interesting targets. Oops. I've missed the best bit. Sorry for that. And it was 2 weeks ago on the 31st of August that we announced these results from our field program. And they're amazing results. We tick the box on all the assays to get full suite of elements, because a lot of times in the historical data up in the Athabasca Basin, most of the results are just on uranium. So you can see there we've got results 40s, 50s percents of uranium. They come from a particular S spot. Some of those results are within 300 metres as well, so it's not just around one very small boulder outcrop. You can see some very high silver numbers, lead 14%, and also very high numbers of rare earths of up to 5%. And there's some historical papers to suggest that there is some association of the uranium and the rare earths in the Athabasca Basin. We've also got areas of 6-7%, high moly numbers. There's a lot of things happening on this project area, and we've got a lot of work to do going forward. As I said, we've just secured 3 geologists to start work full time with us at the end of September, so we can really progress this project, get it 3D modelled, and aim to have drill rigs on the ground by the end of the year post freeze up. Our second project is the Clough Lake project. It's located about 7 kilometres away from the historical Arafura Clough Lake mine. That produced about 62 million pounds of uranium over its time. Again, we've just been going through historical data here, and we've highlighted a northern target and a central target. We're hoping to get some geologists on the ground there. Having said that, we're going to defer this one. It's only a recently staked tenement package, so we'll be focusing on the Hook Lake project for the next 6 months, and where possible we'll get some people over this project to accelerate Clough Lake. But our priority unquestionably is the Hook Lake project, where we plan to take that up to drilling at the end of this year. We have 5 other projects. All of these have either been staked recently. We haven't put out a lot of data about them because we're just technically short in terms of people and time. So we'll be going through the historical data and presenting that to the ASX shortly. So you'll see information coming out on Surprise Creek, the historical Laredo uranium mine, the Smitty uranium mine, Hidden Bay, and also Pendleton Lake. The Pendleton Lake project, to the south of us, Rio Tinto's earning in on a project that abuts our ground, and they're spending up to $30 million to earn their interest in that particular area. So there's a lot of activity happening in this area for both uranium and base metals. Well, I don't need to talk about copper because I was here for the Eddie Riggs show, and Eddie said that copper is king. So I'll leave it at that. And copper is on the forefront of a lot of people's minds from an investment perspective. Why Peru? It's like the Athabasca Basin in terms of grade. Peru is the second largest producer of copper and the second largest producer of silver in the world. So it's got a known track record in relation to success and production of copper and silver. This project's been in the company for a number of years, but has had no work done on it until recently. And we got a geologist to go out there and do some sampling, both channel and rock chip. We were thinking about dropping this particular ground, and he came back with 12 of the 20 samples producing grades of between 1% and 6% copper. Silver results of up to 500 grams per tonne, and a few lead numbers there as well. We now have 3 full-time geologists on the project. We've currently mapped 19% of the area. We've staked a significant amount of ground around it. And again, we're hoping to get that project up to drill target ready and plan to have a drill rig on there by the end of the year. Peru's not as busy as Canada and WA. We get assay turnaround in Peru of around 5 days. So it caught us on the hop when our geologist on the ground actually presented in his weekly presentation the actual results from last week's field program. We were expecting him to come 8, 10, 12 weeks later. So we went into a trading halt pretty quick. So that's just a picture of the area, very typical of Peru. A lot of mineralisation outcropping. We're now looking at the style of mineralisation. We're putting data through Leapfrog, going through the IP surveys. It's got a lot of information. We're now bringing that together with the mapping that we're doing. The mapping started off in the top left-hand corner, and we're just working our way through that whole project area. I just thought it was Eddie who didn't know how to use this. So again, we've got 5 key target areas there, results that cover the whole area. So it's not one specific area that has, all the results coming from it. But again, they haven't been photoshopped. They're photos as seen from the camera. Just a very nice green tinge to all of it. So our work program, we're going to have 3 geos working on the ground, both in Peru and Canada. Both projects are being accelerated at a similar rate in terms of putting the information together, putting the effort to getting our target ready for drilling, because that's what it's all about, is to get the drill rigs on there and see what we've really got. Clough Lake's Hook Lake's interesting. It's going to be high grade. High grade's exciting when you get to the mining stage, but from an exploration point of view, the target's going to be a lot smaller. So we're talking potentially of a couple of 100-metre long strike, not kilometres when you're looking at low grade targets. So a challenge, but if we find it, happy days. So in summary, we've got 2 critical elements in terms of uranium and copper in 2 great jurisdictions. We've had some outstanding results that we've presented in the last couple of months from recent field programs. We've got an excellent team together that can work these projects through, and we're looking forward to presenting the next bit of information to the market. Thank you very much.
George, thank you so much. You go and have a chat with him afterwards in his booth. Ask him about Carlton. He knows how to play the long game, this guy. 1995, wasn't it? Was that when you last won a final? Yes, that's right. Well, you can have a chat. The thing is that you're a stayer. You are a stayer. So go and have a chat with him about that and about the prospects as well. Okay, we're going to stay with rare earths. And China, as we all know, is the current dominant supplier of rare earths driving our world. And as we've heard, it's not optimal. It leaves us all quite vulnerable. The rest of the world is seeking alternatives. And that's why our next presenter is here. Arafura has a project that could be a part of the solution, and it's an advanced project as well. This fellow is Gavin Lockyer. He's the MD for Arafura. Would you please make him very welcome?
Thanks very much, everybody, and thanks to the organisers, and thanks for those that have persisted after lunch. It's always a tough gig when you've got a belly full of food. As you just heard, I'm here to talk about Arafura Resources and our Nolan's project, which sits in the Northern Territory of Australia. The Nolan's project represents something that Australia is really needing, and I think the rest of the world is needing, and that's why we're here at a new technology metals conference, that we need to start thinking beyond the quarry, and that's certainly something that Arafura intends to do. I won't rehash a lot of the things in this presentation have already been spoken about by many other presenters around digitalisation and decarbonisation of the world, and Australian resource projects stand to benefit from this revolution. All the e-mobility and the renewable energy sectors rely heavily on rare earths, as you've heard before. And Australia and the Nolan's project sits as one of the very few shovel-ready projects that can quickly come into production in the near term. I won't go through the uses, I'm sure you're all familiar with them, but I will give you some stats. So EV market growth is exponential, somewhere between 10 to 40 times growth in the next 20 years. And the graphs that are shown there are representative of stated policies scenario, i.e. What governments have currently stated or what projects have basically stated and when they're due to be in production, and forecast demand. But also if there's a sustainable development scenario to meet Paris Climate Accord by zero emissions by 2050. And you can see a great disproportionate growth requirement there. And I think in terms of the critical mineral space, in particular rare earths, the COVID issue in China, when a lot of the factories had to shut down in Wuhan last year, really highlighted a supply chain issue that has always been there. But the value of the rare earth into an electric vehicle is minuscule compared to the value of the battery. And so most auto sectors and also wind turbine sectors neglected to basically start securing their supply chains, and they were mainly focused on lithium, all the battery metals. But as is also being currently highlighted in through the semiconductor issue out of Taiwan, these rare earths and semiconductors represent less than 1% of the overall cost of the vehicle. But without them, you don't have an auto sector. And the auto sector in Germany employs over 15% of the population directly. In terms of mineral demand growth, just focused on the EV sales, so excluding any of the wind turbines or renewable energy sectors, you can see there that, as we've heard from many other speakers today, there's a range of metals that are needed, and rare earths are also part of that chain. For Australia, it's forecast that in the next very short period of time, the value of revenue generated from production of coal and selected energy transition minerals will outgrow that of the traditional coal sector. And I think this is something that politicians really need to start taking a realisation of. And I think the Australian government's starting to do that through its Critical Minerals Facilitation Office. But in order to get Australia on the map and moving, we need to start transitioning away from our traditional exports. The key facts about the Nolan's project: we are a world-class project. We've got a mineral resource. We've drilled something like 90 kilometres into this resource. We know it pretty well. It's got a 40-year life of mine minimum. That's only delineated from surface down to the vertical depth, 220 metres. We've also put in drill holes down to 440 metres and still been in mineralisation. So this thing is a very large, long-life asset. And we believe that through our current development program, we'll be in production, which is aligning with a global shortfall that's coming in the EV space. Very easy to get to. It's 135 kilometres north of Alice Springs, next to some very good existing infrastructure. You can see the red line travelling diagonally through that chart. That's the Amadeus gas pipeline. So we've got access to energy, and we're doing all our processing at site. Because we're only 135 k's out of Alice Springs, the workforce will be able to be bussed in and out. It's a very small mining operation. It's mainly focused on chemical processing. The other important thing is around the tailings and process waste. Many of you be familiar with some of the issues in Malaysia around rare earth processing and waste disposal. What we offer our customers in this ESG high environment is the fact that we can give them traceability of product and also waste materials at site. Why we say we're shovel ready: we've got all our federal and Northern Territory government approvals. We've got our environmental approvals, both at federal and local territory. We've got our mining licenses granted. We've executed the ILUA with the TOs, and we've completed a feasibility study together with an extensive piloting program, which encompassed taking about 12 tonnes of material from site and processing it through the various phases of operation to produce a separated neodymium praseodymium oxide, which has been qualified by customers globally. We recently completed a capital raising, and that's allowed us to complete the FEED. We announced last week that we've appointed Hatch to do the hydrometallurgical FEED design, and that'll allow now the engineers to get on and do what they've got to do, whilst the rest of us in commerce, sales and marketing and finance look to secure the capital required for this project, which is not insignificant. So our targets for the rest of this year are really to conclude agreements with those offtake customers and also working with export credit agencies in foreign jurisdictions in order to secure the overall debt funding package. Earlier this year, we received 2 conditional letters of support from the Australian government, one from Northern Australian Infrastructure Fund for 100 million Aussie dollars, the other one from Export Finance Australia for 200 million Aussie dollars, potentially for a 15-year debt facility. We will be looking to use that as the cornerstone for our debt-led financing strategy. which we hope will tie back to offtakes and ECA funding in foreign jurisdictions such as Europe and South Korea and Japan. We're targeting a final investment decision at the end of FEED in about this time next year. And if everything goes to plan, we'll also have the financing package together such that we can go to FID, targeting first production by 2024. The traceability around a single site processing facility really offers our customers a big advantage. And I think we heard in the one of the European metals discussion before about Volkswagen, for instance. They have to audit their supply chains, and historically it would have been an audit back to the magnet component maker. Now those magnet makers can typically be first-class Western style facilities, but when you go back to the mine and how those wastes are disposed of and the processes involved and are they sustainable, a lot of the current production will not be able to meet those European standards that are coming into law next year. And this is why it's extremely important for us to get our environmental approvals passed, including our waste management, so that we can also provide that level of security to our potential customers. We've got a raft of ESG activities going on at the moment. We hope to put out our next sustainability report this month, perhaps early next month. But there's a number of organisations globally. You see IRMA in the middle there. We have completed the IRMA Ready, which is a pre-assessment. We're not able to get ISO equivalent certification yet because we're not a producer, but we've gone through the pre-qual process such that when we are ready, we're ready to go. We're also looking at some local technology group here called Source Certain out of WA, who has some pretty clever technology around tracking minerals through ore bodies, through processing and into end product. And we think that that offers our customers a differentiator as well. Our offtake strategy, as I said, is focused on those traditional trading partners of Australia. And we're seeking to feed into industry that is not part of the Made in China 2025 strategy. China wants to be the world leader in EVs. It doesn't want to be exporting rare earths or rare earth magnets. And so many existing businesses will lose their business going forward as China requires more and more raw material for its own business and its own EV growth strategies. And so at the moment, we have about 9 or so parties that are interested in offtake. We're in a range of detailed, some of them are much more advanced than others. Some of them include potential equity participation. Should we execute every one of those contracts, we'd have actually 120% of our planned production signed up. Our plan is to have about 85% of that done prior to FID, because it obviously informs the debt package that we can have. I'll just take a step back now and talk more generally about the NdPr market and the opportunity. Obviously, we keep saying that these minerals are in high demand, but there's a real supply shortage. People think historically China could just flick the switch and increase production. China can't do that anymore. And I'll explain a little bit why in the next couple of slides. But you can see here that there's room for more than just one Nolan's. The world needs significantly more rare earths if it is to sustain the forecast growth of in the electric vehicle market. Throw on top of that wind turbines, and it just gets exacerbated even further. What we have seen, though, is in June this year, China has imported rare earth metal ores, has increased by about 84%. So when people say Mountain Pass or MP Materials is going to come on board, they're already feeding into the market. That's part of the Chinese market. They're already being processed. People say Iluka are going to come on board. Iluka is already exporting monazite material into China. So a lot of these existing, what the world thinks is external supply to China, are actually already feeding into the supply chain. And we can see from these graphics that the world needs more. The prices we heard from, I think, Jeremy from Rare X before, obviously they've increased nicely over the last little while. We'd like them to consolidate at these levels for a bit and then kick up a bit further on. But I think the bottom chart there is the really surprising one, where you can see that global EV sales, and that's BEV, battery electric vehicles and plug-in hybrids, by month has been much, much greater, even though through COVID, in the light blue bars you can see there, than the previous year. This is just a sign of the time, and this is why prices are being put under pressure. Many of the long-term contracts that automakers had with magnet producers in China are now expired, and when they're coming back to renegotiate the price, they're not getting $50 a kilo for NdPr. It's significantly higher, which is great for us. The other thing about supply, just quickly, is in the top chart there, you can see that most rare earth plants in China are actually at maximum utilization rates. So they don't actually have the capacity to be able to switch things on as they perhaps could have done in the past. And when they do need additional capacity, it will have to be in ESG compliant factories, and this will come with a cost. So the historic low cost production coming out of China, I think we will see greatly change in the next 6 to 12 months. And finally, last slide, not all rare earth projects are the same. Unless you're producing a rare earth oxide or an NdPr oxide in our case, most of it will have to go through China for processing. And there's a real risk that China may actually prohibit exportation of toll-treated materials or add a taxation system to it for on sale. And so it's extremely important for us that we are providing our customers with an NdPr oxide. We even have in place at the moment with an agreement with a metal converter, which is subject to ink coming on the paper, so that we can offer our customer metal, so that when we execute an offtake agreement, it could be for an NdPr metal, which can then go to their preferred magnet or component supplier, which may or may not be in China. So thank you very much for your time. Appreciate it. And come by booth 18 and speak to some of our sales and marketing guys if you're interested.
Impeccable timing, sir. Thank you. Now, if you can't get around to booth 18, you know where you can find that guy there? His passion is ocean swimming. So don't catch him on the next Rodeo swim, but he's down at Scarborough Pool every weekend, aren't you? So just go and catch him down there and ask him some questions. Catch him off his guard, see what you can find out about. Next up, Filling the Mill is the headline for our next presentation, and the focus is the Black Swan project, but there's a long history of production dating back to 1997. It is in need of refurbishment, but once the funds are secured, it could be up and running in less than 15 months. So not this Christmas, but it could be a bit of a bonus for next Christmas, and it could be a bonus in your investment portfolio. Peter Harold is the MD of Poseidon Nickel, who is the company behind this move. Let's make him welcome to New World Metals 2021. And Pete, I believe this is not the first time you've been involved in Black Swan, is it?
That's correct. I was working with MPI in 1995 when they discovered Silver Swan, and I was there when they turned the mill on in 1997, and I'm hoping to be around when we turn the mill on next year. So 360 degrees.
Let's give him a round of applause and welcome to the stage.
Yeah, look, so we've just announced this new strategy about half an hour ago. Timed beautifully with this conference. Actually, it's because I was a bit slow off I had writer's block yesterday trying to get the announcement written up. I was so excited. So anyway, I had a couple of goes at it and I finally got it finished at about 5 o'clock this morning. And then we just had to go through the process of verifying with everybody. So it got released at about 1 o'clock. So I got there just with half an hour to spare. So I'm glad some of the speakers took a bit longer. So yeah, talking about the Poseidon Assets, and there's a bit of history there with me. So what we've got is a lot of assets in the right commodity at the right time in the cycle. So we've got nearly 400,000 tonnes of nickel. So we'd have one of the biggest resources bases of globally of a small cap nickel miner. We've got 2 processing plants, one at Silver Swan or Black Swan that can do about 2 million tonnes, and we're looking at restarting that at about 1.1 million. And I'll explain about that in a minute. And then sort of almost long forgotten, but soon not to be Lake Johnson with an ore body and a 1.5 million tonne mill. We've got a gold tailings project at Windara, which is the old Western Mining Beasley Creek, I think it was, and Lancefield, which was treated there after they stopped mining nickel and processing nickel. We've just done a feasibility study on that, and that's come up really nicely. About just over 150,000 ounces of gold, produces about 55,000 ounces at a relatively nice cash cost. So we're looking to develop that project sooner rather than later, probably bring a partner in to sort of share the risk so that we can keep our primary focus on the nickel. We're targeting production right at the end of next year, so sort of Christmas present for 2022. And we've got a lot of high-grade exploration hits as well, and some good news coming out there. Good board with some very experienced people, a couple of people representing our major shareholders, of which we've got Wyloo, which is the Forest Group, and Black Mountain, Dean and Felicity. Peter Michelli came on board not long after I joined. Peter's got a massive track record, obviously, with Mincor in discovery of nickel sulfide, so he's a fantastic acquisition. And Brendan joined a few months before me, and Derek's obviously got a track record in directing some pretty serious companies, including Sandfire. Capital structure, about 3 billion shares in issues. It's a lot when you see it on a piece of paper. Share price today is about 11.5, so market cap's just under 400 million bucks, and we've just had a very successful capital raising done by Morgans for us and MST Access about 4 weeks ago, massively oversubscribed. We went out to raise 20, and we had multiples of that in the book within 2 hours. So we upscaled that just a couple of million bucks. So we took $22 million in placement. Then we did a SPP, sort of targeting 3, got 13.5 million bucks into the book. So we scaled that up to 6. So we've got about $30 million in the bank. So we're probably the best capitalised we've been for certainly 3 years anyway, which is great. Black Mountain and Tatarang just under 12% each, so 24% in total. And then the rest of it is made up with some high net worths, some previous directors, and then sort of mums and dads. So let's talk about the nickel market. Obviously, we all know about the electric vehicle revolution. So, everyone's got to have a battery. Battery's got to have lithium, nickel, lithium, cobalt, copper to get it around the car. And look, the thing that I really like is this slide here, which is, nickel demand growing from about 2.5 million tonnes, 70% of which goes into making stainless steel. Stainless steel has grown compound since 1970 at about 5% per annum. So that's been the real growth for nickel demand. When I started in nickel 30 years ago, about 1 million tonne a year market. Now it's 2.5 million tonnes. But the growth of the continued growth of stainless steel, 5% compound, plus this new demand for nickel in batteries is going to sort of supercharge the nickel demand. And I'm actually not sure where all the nickel is going to come from. So I saw today that Vale's just announced they're going to develop pommel. Now, that's been around since I was about 2 years old, I think. So that's a long time, over 50 years, and it's always been talked about, but they're actually going to press the button. So that just demonstrates to me that we are going to have this I'll go back. That point there is just about, you need higher prices to incentivize some of these. This is a big HPL plant. It's probably going to cost them, who knows, $10 billion. I don't know, be a big number. But these projects only go when you've got a really strong outlook on nickel, and you're going to be able to, get a lot of investment money in from banks and the market. So I think we're staring down the barrel of some pretty big nickel prices, and as a result, we're very bullish at Poseidon about getting our assets going again. Which leads me into Black Swan. That's the processing plant that sits there today. Replacement cost on a 2 million tonne plant, where the engineers in the room, 150 million bucks. Probably more today, maybe 200 if you add all the infrastructure there. That's sitting there, that last operated in about 2010. There's the 150,000 tonne plant sitting just in there, the one that we built when I was involved at MPI. Then there's the big processing plant, which can do 2 million tonnes. The refurbishment cost on that is very insignificant, and time-wise too, compared to building a new one and getting all the approvals. So historically, there's been nearly 200,000 tonnes of nickel in concentrate produced from Black Swan, Silver Swan, primarily from the high-grade underground, but also from the big open pit as well. And what happened was MPI developed a small project, and then Lion Ore came along and they got taken over by Norilsk for $7 billion. People forget there was a big takeover, and this was one of the main assets, and Norilsk actually increased the size of the plant from 600,000, which Lion Ore had done, up to 2 million tonnes. and then obviously treating the low-grade disseminated open pit, but also putting through Silver Swan material. So we just want to emulate that again. It's not rocket science. The whole focus now is on filling that mill, and we're now focused on Black Swan open pit, high-grade Silver Swan and Golden Swan underground, a little bit of tailings just to get the MGO levels right, and then potentially bringing down Windara ore. Windara has a couple of big resources. There's 150,000 tonnes of underground material, but there's no mill. The mill was taken down many years ago. So we could truck it here, or we could sell it to BHP at Leinster. We don't mind. Whatever makes the most money, we'll do. And then the other option is anything that's in the vicinity, we could obviously treat that as well if we've got the big mill going. So it's all about the big mill, and it's all about filling it up. And we're obviously increasing the resource base and reserve as we go along. And we've got 2 rigs going full time at the moment, and I think they'll be there for maybe a couple of years, who knows. This goes back to 95 when I was working at MPI. It's David Burt in the middle. That was the discovery hole, 14 metres, I think it was about 50 metres of 14% nickel. So within 6 months, with 2 drill rigs going full time, Western Deep Holes, proved up a 60,000 tonne nickel resource at 14% average. So we were mining it 2 years later in 1997. And it was so valuable that they were putting in concrete floors in the drives, and they had like a street sweeper, and they were sweeping up all the dust and putting that through because it was just so valuable. So hopefully we'll be having another one of those street sweepers up there in the next 6 months or so. That was a big ore body, and that obviously got the project going. And then, as I mentioned, it became much more of a deep underground mine, open pit. You can see there. And Silver Swan initially was up here. Then they mined Signet. And then they came all the way down here, and there's still about 16,000 tonnes of 9.5% material sitting down the bottom there, which we'll mine. And then about March of last year, we put a drill hole over here on a very weak EM conductor, and up popped 10 metres of 8% nickel, thanks very much. And then we put 3 more holes in and got 3 decent intersections. And so we've been drilling that out for the last sort of 6 months. And we've just finished all that work. We've just put out all the assay numbers, and we'll have a maiden resource for Golden Swan probably in about 5 weeks' time, and then we can convert that into a reserve hopefully and add that to the mining inventory, and that starts to build that number up, very close to 200,000 tonnes of nickel. So the feed will come from basically a combination of the open pit and those underground ore bodies as well. This is an area of the Southern Terrace that's very underexplored. So we're currently putting holes down from Gosling down between sort of the bottom of Gosling and the top of Golden Swan. There's an area in there that is untested. And there's also obviously areas down here. So currently we finished that 15,000 tonne program, and we've now switched those 2 rigs over, web drill rigs, to drilling those targets out, or this area out here, sort of up plunge from Golden Swan, and also a fair bit of area down around Golden Swan. So what we're trying to do is upgrade the Golden Swan reserve. There's 16,000 tonnes in resource at Silver Swan down the bottom there, only about 6,000 tonnes in reserve. So we'll tighten up the drill patterns and hopefully increase that reserve, and that'll help with the mine scheduling for the big mill. And at the same time, we're doing all that exploration work around the Golden Swan area too. So this is the big mill initiative. So GR's did a sort of a scoping study for us, which we released about a month ago. It certainly dawned on us that the 150,000 tonne mill certainly made sense, just treating the high grade. But with nickel at $9 today and probably going to go a lot higher and stay there for a fair bit longer, it made a bit of sense to think about, just filling up the mill. So we've gone for the 1.1 million tonne case. We're going to do a full feasibility study on that, which will be kicked off in about October. Just waiting for some metallurgical test work to be done, and then we can start that, and that'll finish in sort of mid-February. CapEx is only $20 million. I mean, we're so lucky to only have to spend that much money. Now, I imagine there'll be some cost escalation between when that number was done and when we start next year. But even so, even if it's 20%, it's still not a big number. OPEX under $30. I mean, this is fantastic. And as I said, the ore sources are a combination of open pit, underground, potentially a bit of stockpile, the Silver Swan tailings, which is about, there's a fair bit of nickel in that, but it's more about it's just mostly iron, so there's not much MGO, so that'll help with the iron MGO ratio, which will get it to a very, very saleable concentrate. And then we've got Windara potentially coming down, and there are some sort of stranded assets close by, small juniors have got hold of, and if they want to come and talk to us, we'll have some capacity in the mill for them. and we'll have some interesting conversations, I'm sure. That's a very, very detailed slide, but I'll just bring you into basically here we are today, and in 15 months we could be putting ore through the mill. And, you know, you can't really do that anywhere else. The only other person, well, the other two guys that are close are obviously Mincor and Panoramic, where I used to work. So they're the only three assets in Australia that could be producing nickel within the next sort of 15 months. In terms of new projects, I mean, obviously Western Areas have got Odysseus, which is as well, but that's pretty much it. And if Western Areas gets taken over, there's really only three other investments you can have in pure nickel in development operating assets. That's Panoramic, us, and also Mincor. So quickly on Lake Johnson, that's the mill at Lake Johnson, another 150,000 tonne mill just sitting there, beautiful. Another $150 million to replace, possibly more today. And we're about to do a restart study on that as well. There was about 100,000 tonnes of nickel again produced out of this asset by Lyonor and then Norilsk, shut down in 2014. We picked it up for $1 million in cash. And we've been looking at restarting this a number of times, but the nickel price has not been right. Now it is, and we can go back and redo that study. Does that mean I've got 2 minutes to go or what? Yeah? 2 minutes, okay, thank you. Have to speak even faster. So basically what we're looking at here is there's a big exploration story here. We've just unpacked all the exploration data. New Exco have spent nearly 3 months doing that, and we're going to prioritise quite a lot of new targets. There's about 14 kilometres of strike here, and it's really not very tested at all. Abbey Rose was 10 metres of 3%. If we can follow up that with an ore body, then, you know, you've got a fantastic project. And there's also some other geological theories there that need to be tested too. So we'll get on the ground there next year. Windara, just quickly, that's the old milling circuit, which is obviously gone now. Again, you know, nearly 85,000 tonnes of nickel produced by Western Mining over a period from 74 to 83. There's still quite a bit of nickel there. The previous management discovered Cerberus, nearly 70,000 tonnes of nickel, about 1.5%. There's also Mount Windara. So we're looking at underground mine, processing the ore either at Black Swan or selling it to BHP, plus the gold tailings project, which we're looking to partner up with somebody. Great opportunity there, more exploration potential too. So, you know, it's just prioritising. So prioritise for us is Black Swan, Lake Johnson, and then Windara. In that order. So in terms of the future, you got the maiden Golden Swan resource and reserve to come out before Christmas, convert more of that Silver Swan resource to reserve before Christmas, or certainly into the first quarter, keep drilling the Southern Terrace potentially for some more high grade, complete that BFS on the 1.1 million tonne plant, and make a financial investment decision by May. But we're going to have a preliminary one by the end of the year, because we might be able to do a fair bit of pre-works. With $30 million in the bank, you could do a fair bit of work in the interim, so you could actually truncate that time frame, or certainly make sure it doesn't blow out. Mount Windara, study mining and processing the ore through the Black Swan plant or selling it to BHP, and fast track the development of the gold project because it's ready to go. The feasibility study's been completed. And Lake Johnson, finish that review, start some drilling on the high priority targets, and then dust off that feasibility study that was done and see when you could restart Lake Johnson. So, you know, we could see ourselves, you know, all the way through to a 20,000 tonne a year nickel producer. I was involved in one of those previously. That was Panoramic. When it got to 20,000 tonnes, the market cap was over $1 billion. I can easily see this business with a higher nickel price heading towards that sort of valuation quite quickly. So I'm very excited. Thank you very much.
I was looking for a natural stop then. I was looking for a natural spot. You want to tell everybody, it's quite hard, tricky organising these conferences and doing the plan up for the speakers that you see on the program each day. It causes a couple of challenges for our crew. And on Saturday, we had a late minute chat just before things went to the printer from someone. So I can't get there at this point in time this morning at 10:30. We thought, oh, we've got a special announcement to make today, which he did. In hindsight, it turns out. Something else happened to you today that was pretty special. Do you want to have a proud dad moment?
Oh, yeah. So my middle son, Banjo, was made captain of Scots College for next year. So that was probably one of the greatest achievements in our family ever. So stoked.
So you didn't see Eddie this morning, but that's where you were. Good on you, mate. Well done. And if you want to catch this fella, you won't catch him in a pool. You'll catch him wearing lycra, possibly cycling between Albany and Perth. What are your family of overachievers? Is that your thing there? All right, team. Let's go to our next speaker. Now, as he comes up, he's not a swimmer or a cyclist. Try and guess what he was in a former life. What do you reckon? Professional, what was that? No, he doesn't have the shoes for that, I don't think. He was actually a professional rugby coach, but not here in Australia, in France. Oh, that's pretty impressive. So you've got the muscle, you've got the intellect to push projects over the line, is what I was thinking when I heard that. This fellow is called Ryan Parkin. He is the CEO and the Managing Director of Infinity Lithium, and he's led the company for more than 3 years after initially joining them as General Manager of Corporate Development. That was back in 2018. He's been instrumental in developing the company's strategy to progress the development of the San Jose Lithium project, which of course is in Spain, and one of the EU's premier hard rock lithium deposits, and turning it into a fully integrated lithium chemicals project, ultimately aiming to supply those high-value battery-grade lithium hydroxide for the European auto sector as the world transitions to that electric mobility. And you've only just made it back into the country as well. You're willing to tell us about that before you start?
Oh, no, that's all right. I think I spent a little bit of time in Spain and obviously some challenges getting back in. But, you know, it was a great trip and happy to be back home.
Only just recently. We talked about it over beers. Would you please make him welcome, everyone?
Okay, well, thanks a lot for the kind introduction, Chrissy, and thanks to the organisers of Vertical Event, Argonaut. Really happy to be back here again today after a great event last year. My name is Ryan Parkin, CEO and Managing Director of Infinity Lithium, and we're progressing the development of the San Jose Lithium project in Spain. Now, Europe is powering ahead towards a sustainable future, and the EU's appetite for battery materials, and in particular lithium chemicals, places Infinity at the forefront of these developments, not only in Europe, but also within Spain. Okay, so where we sit at the moment, we currently hold 75% of the project through our wholly owned subsidiary, Extremadura Mining in Spain. And most importantly, we maintain the ability to move ahead to 100% project ownership at any stage prior to the final investment decision. Our project is somewhat of a rarity globally. It's a fully integrated project on site. So what that means is we'll be using Europe's second largest hard rock lithium resource, processing that on site to produce those battery grade lithium chemicals. A very strategically significant project for the European Union, but also Spain. It's a long life project and a sustainable project to produce those chemicals. We also have immense scalable potential in terms of our resource, but also with discussions with strategic partners, we're starting to run the ruler over increasing our output and meeting the needs, which are going to be substantial and immediate in the near term. The ESG credentials of all of these projects are obviously paramount, not least so within Europe. There's a critical focus on developing the entire lithium-ion battery value chain and also that recycling component. The LCA is entirely relevant in this market, and there are regulations that will be governing that moving forward. More recently, the company is inked a deal with the global giant LG Energy Solutions, the largest lithium-ion battery producer in the world, and we're very keen to be moving forward with them and working towards a binding position. Just a quick overview of our board and our corporate information. We're led by Adrian Bias, who's our non-executive chairman, a geologist who's been with the company since 2011, and he's accompanied by John Starink, our lithium expert. He's got vast experience in hard rock and brine projects, but also in process development over a number of other lithium processing plants. Remy Welschinger is based out of London. He's got a European passport, which is very helpful for me, particularly in these times and difficulties getting out of Australia. So he heads up our corporate development and also is the CFO of another AIM-listed company. Our management team, we've got some of the more senior guys there. David Vals is our general manager, who's been with the company from the outset once this project was rolled in 2016. And Dr. David Marie works very closely with John Starink. He's a principal scientist from Talison over a number of years, and we're thrilled to have these two guys leading our technical development and working with Dorfner Anzerplan in Germany now as we're working through our bench scale test work. We have approximately 400 million shares on issue and a market cap of close to $40 million, having recently completed a successful raise with close to $19 million in the bank. So when considering what's happening globally, I think we all accept there's going to be significant demand for these new world metals. And in particular, in Europe, there's going to be very significant demand for lithium. And we're not just talking about the resource that we know well here in Australia, but it's about that downstream conversion of battery-grade lithium chemicals to go into high nickel content cathodes primarily. There are regulations targeting emissions in Europe, and they've been focused on this for quite some time. It's not necessarily the instance of COVID that's driven this, and they've been focused on a net zero carbon 2050 target for quite some time. This has led to the development of a battery passport, which is going to measure the CO2 footprint. And I think Gavin touched on it and others earlier today, but really your vehicle is going to be mapped for its carbon profile. So very logically, if you have one of the very few resources in Europe and you're actually able to retain that value within the lithium chemical processing, there's an inherent value then by your carbon footprint, and ultimately the likes of Volkswagen, Stellantis, Renault and the like are going to have to map out their carbon footprint entirely. The EU is developing their entire lithium-ion battery value chain, as is Spain, as it's a global leading marketplace for the uptake of electric vehicles. The COVID recovery and resilience package was announced on the, probably a better part of a year ago now, which is going to provide unprecedented levels of very cheap debt and grants. So that's 750 billion in Europe, of which 140 billion is allocated to Spain. And Spain recently has been a first mover in announcing how they're going to utilise those funds and align them to the electric vehicle industry. So without going through a whole suite of charts, I think it's been well documented that lithium demand is going to continue to grow, and every year we get up here, those figures for 2030 continue to grow. This projection from Canaccord is just based on EV adoption or EV penetration rate, showing a very substantial amount of lithium chemicals required in LCE within Europe by 2030. And that's at a discount to the more than 1,000 gigawatt hours of lithium-ion battery gigafactories that are projected as well by 2030. So the long and the short of it is there's going to be a hell of a lot of lithium required, a lot of lithium chemicals, and it's a very significant shortfall, not only globally, but within the European Union. The issue for Europe is they've got a very substantial electric vehicle industry moving forward, a major automotive industry to protect, which is entirely dominated by China at this point in time through their retention of battery-grade materials. Much the same thematic as what Gavin touched on in the rare earths. The EU is working towards these sustainability requirements, and as you might imagine, any lithium chemicals coming out of Europe are going to be advantaged in the marketplace, and this is where Infinity is really sitting well at the moment to be able to provide traceability and certainty on supply over a long life project. OEMs, automakers are moving to rapidly develop their own in-house capabilities or work alongside their tier one suppliers. Really, the game here for automakers is to provide vehicles that are affordable to the masses. We're talking about adoption rates that are greater than 50% by the end of the decade. So the major cost you've got to control is your lithium-ion battery. We've had a number of automakers on site, and really what they're telling us is it's imperative that they can control the value chain. This will eventually lead to raw material investment, and we've currently seen very significant investments in the lithium-ion battery production space. So more recently, we've signed an MOU with LG Energy Solution, the world's largest lithium-ion battery producer. They're clearly looking to strengthen their foothold in Europe and recognise the importance of sourcing battery-grade materials. They currently have a plant in Poland, but they've been flagged in the press and elsewhere, looking at a number of other plants throughout Europe, including Spain. Strategic investment in materials from automakers has been flagged by the likes of Volkswagen, Stellantis, which is the old Peugeot, and it merged with Chrysler. So it's really about watching the space and understanding within Europe that these major actors are starting to move very aggressively. So where we sit in the value chain is the front end of the process, and we haven't gone through it in any great detail, but obviously the raw material extraction with an extremely large hard rock lithium resource, the second largest in Europe, and it's going to have a very low carbon footprint, most importantly as well, because we're moving it 800 metres to 1 kilometre to the conversion plant on site, not halfway around the world to converters in other markets. It also has an inherent strategic value, quite obviously. But the process that we're using, it's a conventional process with a subtle adaptation on that roast and leach. And that's where we're introducing a sulfate in the kiln. This again provides greater optionality in terms of your carbon footprint, in terms of your tailings, which are much more benign, So there's strategic importance in the value chain, not only by way of proximity to end markets, but also, again, those ESG credentials. The automakers are looking at varying types of cathodes. So on one hand, you'd be looking at solid state, hopefully in the next couple of years, solid state electrolyte, higher nickel manganese content cathodes, which will be requiring lithium hydroxide. And that's where our project is currently focused. However, we're looking at dual process optionality to determine whether and how we might be aligned to the Spanish market and whether there's a case to answer for battery-grade lithium carbonate. We're going to need vast volumes of both, and there's going to be a market both within Spain and the wider European Union. Okay, so just a quick glance at our resource here. Again, probably repeating myself a little, but we've got 56 mineralised drill holes with close to 12 kilometres of drilling. It remains open at depth there. We've picked a couple of holes just to give you some details in and around that, and it remains open at long strike as well. This is a very significant, large, homogeneous ore body. When you walk the ground, you can see the lithium sticking out of the ground. It's a well-known resource. It was a tin mine in the 1960s, so you can still see the shafts in place. You can see the dilapidated buildings, and it was further drilled in the late 80s and early 90s by Tulsa Group, who undertook a study to produce lithium carbonate. It's obviously a very different market back then, focused on technical grade. It was a race to the bottom with the brines. So, you know, the resource is well established. However, the commercial case wasn't. So Infinity was successful in a tender process with SEA in 2016, undertook further drilling activity in 2017 and 2018 to where we find ourselves here today. A different market with infrastructure in place that's going to allow for a truly unique integrated project on site. Just a high-level glance at our flow sheet here, and really just to focus on our kiln feed of close to 1.3% lithium oxide, obviously a little less than what you'd be familiar with a spodumene resource. However, it's because we're processing that on site. We're not having to move vast volumes of waste long distances, so that's what really builds the economic case here. Our roast process, we use a sulfate in the kiln, and then we undertake a water leach. So this differs from a conventional process with spodumene, where you'd undertake a roast process and then introduce your sulfate in the leach, so through large amounts of sulfuric acid. And I think the numbers for our project would entail close to 500,000 tonnes that would need to be imported. So it's a very different scenario. So a much greener opportunity for the company and for the market. The infrastructure that's in place, I know I'm on the clock here for the last couple of minutes. So just to note the gas pipeline there in the top right-hand corner, that was installed in 2007. And that's really the game changer in terms of the infrastructure. That allows the powering of the kiln and the ability to produce downstream. There's also vast amounts of renewable energy in Extremadura, a lot of wind, a lot of photovoltaic, and you can see just one of those facilities very close to the project there. There are two major highways leading to the project area, and you can see on that map that we're located in the midpoint between Madrid and Lisbon. So very easy to source adequate skilled workforce. The ESG is very obvious to all in this space, particularly in Europe with that carbon footprint measure that we're talking about. Low strip ratios, close proximity to markets, availability of reagents within those markets within Europe, and more importantly within Spain. So there's a very logical story here, and we're looking at other elements to further improve our ESG profile. We've been approached by other market participants to explore hydrogen, to blend natural gas to power the kiln. So this is all very common thematic within the European space. And just finally on the funding, I noted the COVID recovery and resilience funding of 750 billion. Spain allocated 73 billion in grants. So we've got a great opportunity here. There are various initiatives that have been launched, and we're primed to capitalise on that. So it looks like I'm out of time. Thanks a lot for your time today. And if you'd like to talk any more about our project, we'll see you in the booth at the front. Thank you.
Thanks, Ryan. Ryan Park and Infinity Lithium. Coming up here, our next speaker, Mr. Scott Williamson, Managing Director of Blackstone Minerals. So Blackstone, of course, we're moving across to nickel sulfide, across to Asia. Scott began his career as an underground mining engineer over here in the goldfields in Western Australia. His recent experience is in equity capital markets, with previous roles as a resources analyst at Hartley's and investor relations manager at Resolute Mining. He's a unique blend, as we've said before, of experience in mining and also in finance with both the corporate and the technical capability. So it lets him see things a little bit more creatively and differently. Would you please put your hands together and welcome Scott Williamson. Thank you, sir.
Thanks, Chrissy. I think this might be my 4th New World Metals conference now with Blackstone. We started our lives as cobalt explorers, and I think 4 years ago was my first ever presentation in this room. I started with 3 jokes and I didn't get 1 laugh, so hopefully I'm getting a bit better over the journey. But I've done a lot of these now, and I've never been more excited about the future of New World Metals and the future of our industry. And yeah, what a great time to be a junior miner mining for the metals that are going to change the world and change the future for our children and our grandchildren. So with Blackstone, we can give you direct exposure to the downstream products, the high nickel cathode products. So we're actually looking to produce the first stage of the lithium ion battery. It's called a nickel precursor, and it has a ratio of nickel, cobalt to manganese of 811. And as I said, we started as cobalt explorers, and it was our partners, our friends in Korea that said to us, can you go and look for nickel sulfide? And that's why we came across this little mine in northern Vietnam. It's much more than a little mine. It's a nickel sulfide district. It's like going into Campbell 60 years ago. There's nickel outcropping everywhere. You can pick it up off the ground. It's quite amazing opportunity geologically. It's very similar to the Norilsk and Jinshuan nickel districts in Russia and China. It's the same belt that actually goes up into China all the way through to the Jinshuan nickel district. But we're going to do it a little bit differently to all the other nickel miners out there. We're going to take it into that downstream. This is a scalable and modular downstream refining business, and it's looking to produce that NCM 811 product. And you can see there, as an industry, the demand that's coming means that we need 1 million tonnes per annum of class 1 nickel. That's the entire world supply today. We need to find, develop and build and deliver over the next 5 to 10 years. So it's a big challenge as an industry, and I think we're up to it, but it's going to take a lot of hard work and a lot of focus to deliver into this EV revolution. So you can see here, it's very clear that they're moving towards that 811 ratio. So it's all about the high nickel cathode. Everyone wants their EV to be able to get down to Margaret River. So if you don't want to stop short of Margaret River, make sure your EV's got some serious nickel content in there. And actually, I'd be looking for the 811 ratio in your first EV. You can see there we've got a supportive shareholder base, Deutsche Balaton out of Germany. They've been very supportive. They came in when we were exploring for cobalt. They followed us all the way through into this nickel opportunity. We've got EcoPro. They're the largest cathode manufacturer in the world, and they are out of South Korea. It was actually EcoPro that's pushed us in the direction of the nickel sulfide opportunity. We found the opportunity, but it was their insight that gave us that sort of strategy to move towards nickel. We've recently introduced Fidelity, which is one of the largest institutional investors in the world, and they're very focused on our high ESG compliance and our green nickel opportunity. And we'll talk more about what green nickel is all about. Board and management have a strong position. So we've got some crusty old mining executives there, and including myself. We've got Mr. Jung, who's the representative of EcoPro, and then Miss Alison Gaines, who is a corporate governance expert, and it shows our commitment to ESG compliance. Well cashed up with the last quarter of 14 million and sitting around $160 million market cap. So you can see here we've got the downstream and the upstream business. The upstream is the previously operating Bandfork nickel mine. We'll talk a little bit about that, but today we'll really talk about what the future holds for Blackstone, but for the industry, and it's the ability to take nickel concentrate and convert it into that precursor product, which is that 811. We have a very strong partnership with Trafigura as well as EcoPro, so we have downstream partners like EcoPro, the cathode manufacturer. We have upstream partners like Trafigura, the largest nickel trading house in the world. Trafigura and our mine will feed concentrate into this downstream business, and that's where we'll partner with the lithium-ion battery industry end users. At the upstream level, we're currently drilling out 5 different ore bodies. We've got 25 targets. The first 5 are mines. It looks like we've got 2 big open pit mines and 3 small underground mines. And that's the 2 different types of ore bodies. We have large disseminated, medium to low grade ore bodies. We have high grade, narrow underground massive sulfide veins, similar to what we mine in Kambalda in Australia. And so to combine those 2 into 2 different concentrators, we're looking to build a second concentrator. You can see the existing concentrator is well suited to those high grade underground mines. We will build a second larger concentrator for the big open pit disseminated ore bodies. That'll all be in the PFS later in the year, and then moving into the definitive feasibility study phase and looking to commercial production. So this upstream business will feed concentrate into our downstream business. So that's our district. It's outcropping nickel massive sulfide, 25 targets. You can see the big mag anomalies are the intrusions. So we use mag, we use modern day geophysics, electromagnetics to unlock what we believe could be a world-class nickel sulfide district. So this is the very lucrative downstream business. So we've just completed a pre-feasibility study on this strategy to convert the concentrate from our mine, but also from our third-party feed providers like Trafigura. We're now moving into the pilot plant phase and the definitive feasibility study phase. That's a really important time where we work closely with our downstream partners, our feedstock partners. Each of these battery makers wants a slightly different chemistry. Some want the 811, some are going further, 9.5.5. So there's the ability to work closely with those partners and then lock in the offtakes, the joint ventures, the equity that will come from those major players. They will write big checks. We're pretty confident of that. The funding, a lot of the funding will come from the downstream partners. Then we'll move into the detailed engineering and construction and produce that precursor in 2024. So just on the pre-feasibility study recently announced, this is a globally significant downstream nickel refining business. This is the high-level numbers, $2 billion NPV at a conservative pricing. Capital intensity, 491 million. So there's not many projects out there, 4 times NPV to CapEx ratio. If we use today's pricing, I think, I'm not sure if everyone realised, nickel just went through $20,000 a tonne. Add another 20% to that price, and that's the price we'll be getting. It's actually 40%, sorry, today. That drives a $3.5 billion NPV. So very lucrative business. And some of the best economics I've seen in the industry. So you can see here we've got this central refining business in northern Vietnam. We're using the renewable power. We're feeding in those 2 different types of ore bodies from our mines. So we'll have 2 concentrators, the MSV concentrator, the disseminated sulfide larger concentrator. We bring in the top-up feed from our friends at Trafigura. So they'll be an important feedstock supply partner. And then we're also talking to all the other nickel miners out there today that aren't in offtake. So anyone that wants to sell some nickel, you can either go to BHP or you can come and have a chat to me, and I'm sure I'll be able to give you some better terms. This is where we're situated. So we're in the northern part of Vietnam. You can see here we've got the rail infrastructure down to the port city of Hai Phong, a local electric vehicle company called VinFast. Look out for VinFast. They are Vietnam's answer to Tesla, and it wouldn't surprise me if one day we're seeing VinFast cars driving around Perth. So VinFast are a major player in the industry. Our nickel is most likely end up in a VinFast electric vehicle. So we've got this ability to take the nickel from our mine, convert it into these downstream products at one of these 2 locations, put it into the electric vehicle down at the port, and it's a great way. It's a great way to put Vietnam on the map. We believe that we're a very important part of that supply chain into that electric vehicle company. These are the major nickel, class 1 nickel sulfide miners in the world today. We're looking to sit somewhere around here. So 2 of our main competitors are BHP and Glencore. pretty big names in the industry. The reason we can compete is because of the renewable power in Vietnam. So we have the largest hydro power plant in Southeast Asia. We have some of the most competitive labour costs in the world. The margins on this downstream product mean that we can compete with the majors. And the other thing is that Tesla have come out, they've said, we need all the nickel you can deliver, but it has to be green. So green nickel is all about the class 1 type. So to get to class 1, you really want to be in the sulfide type. It's a much easier process, less capital intensive, and a less technical risk around the sulfide. You want to be vertically integrated, so you want to be nickel in the ground all the way through to those downstream products near the mine site. You want to be using the renewable power. The pressure oxidation process, it's a hydromet technology, it's better suited for this downstream chemical business. You want to be using electric equipment. We're in the Electric Mine Consortium with some of the major players in the industry, and it's all about that corporate commitment to ESG. We have trademarked green nickel, and no one else in Australia can say that they have green nickel. We believe that we have some of the cleanest and greenest nickel in the world. So just on a real summary of our business, we can purchase nickel concentrate from our mine at arm's length. We can purchase it from other nickel miners in the world, Australia, Canada, Asia, Africa. We purchase it for 75% roughly. We convert it into the 811. It trades at a 120 to 140% premium. My friend at Nolan from Samso, he's coined the phrase, it's basically like making hamburgers. So we buy all the ingredients, we put them together and we sell it. The ingredients are nickel, cobalt and manganese. Combine them together and you get a significant uplift in value. So we're the McDonald's of the nickel mining industry. This is the premium that has been trading this 811 product between 20 and 40% premium. We've used 20% to drive that $2 billion NPV. Like I said, today's pricing, it's around 40%, and that's about a $3.5 billion NPV. And this is why we can pay a little bit extra. So you can see in this chart, we can pay 5 or 10% above the market rate for nickel concentrate. So whatever BHP is offering you, Peter, I'll beat it by 5 or 10 because of these numbers. So you can see driving strong revenues at those higher concentrate payabilities. So the next 12 months are really important for Blackstone. We're going to de-risk this. We're going to go from 150 million market cap. We're going to try and close the gap on that NPV, and to do that, we need to de-risk this opportunity for our investors through DFS, pilot plant, further drilling. That's a big year. Funding, final investment decision. It has to get closer to that $2 billion NPV, one would hope. Thank you for your time.
I had to look up then, make sure I was in the right presentation. There was one joke and I heard a bit of laughter. You appreciated that? You appreciated that? All right, Scott, thanks so much for that. And look, like Scott's presentation will be on the company website, so not the actual video of it, but the PowerPoint is on the website. It's the same for all of the companies that present here. We will hand them the footage from today. It's up to them whether they want to post it onto their website, but you'll definitely be able to follow all of those PowerPoint presentations, and they have the hyperlinks to the different facts and figures that they have presented to us as well. All right, Charger Metals is next up at the conference, a brand new explorer targeting metals in 3 sought-after mineral provinces. Brad Dixon is in charge of investor relations with Charger. Let's hear what's an offer for the room today. Please make him welcome.
Good afternoon, everybody, and welcome to Charger Metals' maiden investor presentation. Charger Metals is a brand new story, recently listed. It's only been listed on the ASX for the last 2 months. Immediately prior to listing, Charger Metals acquired a 70% interest in the Coates nickel copper PGE project out near Wundowie. It also acquired interest in the Lake Johnson Lithium project and the Bino Lithium project near Darwin. Charger's commenced systematic exploration on all three of these highly prospective projects and is pretty excited about how things are progressing. If we look at the corporate overview, David Crook heads up the company as the managing director. David's a very experienced managing director. He has been involved in mining for the last 30 years. Strong commercial exploration, project development background, very seasoned geologist. In his last role, took a project through from discovery all the way through to successful mining. The rest of the board's very successful in the management of emerging resource companies, particularly in the lithium space. And if we look at the corporate structure of Charger Metals, we've only got 50 million shares on issue. Trading in the high 50s today, closed at 61 yesterday, market cap of around $30 million with $5.5 million cash in the tin. One of the things that sets Charger Metals apart from a lot of its peers for a company of this size is the impressive register that it's put together for a small junior explorer. Lithium Australia has a 19% interest in the company in return for vending in the projects. Gun Singh is a strategic investor out of the UK, focuses very much in the battery minerals space. They've got a 7% interest in the company. Lin Global, who are one of the major sponsors here today, world leaders in investing in battery mineral junior companies. They're sitting there at 6%. Cadence Minerals are another strategic investor sitting there with 3%. So there's some very impressive hitting power and balance sheets sitting on that register, and very tight structure. The directors and management are well incentivised, having a 10% interest in the company on a fully diluted basis. The top 50 speaks for 60% of the register, and the top 20 speak for 60% of the register, and the top 50 speak for 70%. If we look at the share trading performance since listing, and it's, we listed on the 9th of July, 2 months ago, and traded as high as 91 cents. Trading in the high 50s today, and of the 50 million shares on issue, 18 million of those are escrowed, so there's only 32 million tradable shares. Now, with the strategic investors on the register, a lot of those aren't going to trade either. Very strong trading volumes. We've been averaging in the order of 3 million shares or $2 million a day. So since listing, we've traded 100 million shares, and we only have 50 million shares on issue, and in the order of $50 million worth of value. So very strong liquidity. A lot of that volume's been over the last month as we've started to get some news flow out there on our initial targeting work, which I'll talk you through shortly. The first project I'm going to talk about today is the Coates Nickel Copper PGE project. This project sits 60 kilometres to the east of Perth, near the town of Wundowie. It's around the Coates mafic intrusion, which has been known about since the 80s. That mafic intrusion extends into our property. You can see in this area here. The other thing about this project is it's sitting only 20 kilometres from the Julimar discovery of Chalice Mines. So this is not just a neurology play. You can see the Julimar discovery up here. This is us down here. This is not just a neurology play. There's known nickel, copper, gold, and PGE anomalies. So there's been some shallow drilling done, for bauxite, and at the bottom of the hole analysis are giving these anomalies. So we've got the mafic intrusion. We've got anomalous nickel copper PGEs, so we think it's pretty exciting. And we're in the same belt as a world-class PGE discovery. So the next steps, we've commenced further geochem soil sampling and should have some news flow coming out on that. In August, we flew SkyTem, using a helicopter to get some EM data. That data is currently sitting with the geophysicists for processing and interp, and we should have some news flow out on that very soon. So looking closer at these anomalies coming out of the historical drilling, what we're seeing is that the PGE anomaly up here is kind of focused down to the south towards the mafic intrusion. The same with the nickel anomaly, same with the copper anomaly. The gold anomalies are also down in that area, and the chromium pathfinder elements is located down there as well. So, two different targeting tools pointing in the same direction. We're looking forward to getting back our SkyTem results prior to finalising our drilling locations. So this district's copped a lot of attention over the last 18 months for good reason. A lot of this area was vacant. People have explored very lightly for PGEs up here, but a lot of the previous drilling, didn't sample for PGEs. And you look at some of our peers in the area: Caspin, Pursuit Minerals, Mandrake Resources, DevEx, Burley Minerals are getting a lot of smoke. And where there's smoke, there's generally fire. So hopefully there'll be further discoveries in this district, and hopefully we make them. The second project I'm going to talk about today is the Bino lithium and gold project. Now, this is 15 kilometres south of Darwin. It's got all the infrastructure and the benefits of being near a major city and port. The Bino project covers 63 square kilometres of ground in a known pegmatite swarm. This ground sits adjacent to the Core Lithium's Finniss lithium project, which has got in the order of 15 million tonnes at 1.3% lithium oxide. The gravity suggests that structure flows from the Finniss project through to our Bino project, and we've been in there, we've hit the ground running, we've been in there doing some soil coverage. The first lot of assays, samples are currently at the lab, and we should finish that initial soils program over the coming days. So there should be some news flow out on that. Looking closer at this project, you can see this is the Finniss project up here. The area in grey is Core Lithium's holding. We sit right in the middle of that holding. The gravity structure appears to run straight through here. All the blue dots you see there are known pegmatite occurrences. So this area, the mineralisation here is similar to what you see at Greenbushes. It's you've got lithium in the pegmatites. You've got some pegmatites with tantalum and tin. All of these blue dots are pegmatites. We've got 14 known pegmatites on our ground in here, the blue dots you see in there. Hopefully our recent soils program will identify a number of extra pegmatites and targets. So look, we're pretty excited about this. Core Lithium happened to be drilling right in the middle of our project at the moment. The mining leases in the middle here have previously been mined for tin, and so we're pretty keen to finalise our targeting work and get a drill rig in here as soon as possible. So the third project I'm going to talk about today is the Lake Johnson Lithium and Gold project. This area is also well known for nickel, and the region more recently has been very attractive for lithium exploration, with Kidman's discovery of Earl Grey, and down the road, that's located 70 kilometres to the west of our project. Wesfarmers and SQM Lithium announced that they'd appointed their engineers on that project, so it looks like they're going ahead with the development very, very shortly. That's a world-class project. It's one of the world's biggest undeveloped hard rock lithium deposits. So we're right next door. We're in a green belt with known lithium occurrences. We've got the Metcalfe spodumene deposit. When you look at that map, all the green dots you see, so this is the spodumene, Metcalfe spodumene prospect. Up here, we've got our Mount Day prospect with those green dots. All the orange dots are nickel occurrences, and the gold is gold. In the middle here, we've recently released some of our geochemical results from our first soils program there, and we've come out with another target. So this is a nice little target that's come out of our initial soils program, sits in here. So there's known lithium over 50 kilometres of strike, including in the middle here. So we want to get in here and systematically finish the soils program and our targeting work prior to getting the drill rigs in. There's already some walk-up targets. This is outcropping spodumene at Metcalfe. It sits down to the south here, and so it's this region's never had a lot of money spent on it for lithium, and we're pretty excited about getting in there and attacking it. We've been slowed down a little bit from the very wet winter, and as it dries out, we can hit the ground and get in there and explore this project. So there's no stocking fillers, in this float. All three of those projects are serious projects. We believe, we're in the right space. You've heard people talk about lithium demand and nickel, copper demand coming out of EVs. I'm not going to talk to that. However, everyone knows the thematics. We've got well-credentialed mining professionals running the company. Our geologists have focused on lithium and nickel exploration for the last 7 or 8 years, very successfully. We've got 3 highly prospective projects that are surrounded by, adjacent to world-class battery minerals projects. So Coates, is a Julimar lookalike with the geochem signature, and we're pretty keen to drill that. Bino, known pegmatites next to a lithium mine that's financed to go into production. And Lake Johnson, known lithium occurrences over 50 kilometres. To us, that looks like a big lithium system. And exploration's commenced on all 3 projects. We've got a very, very well-funded position, $5.5 million in the tin. Very strong register, with some good hitting power and very tight capital structure that, as we get some news flow out, should set our shareholders up very well for further share price appreciation. Thank you very much.
Okay, we'll let him get away with that extra 55 seconds because he's a version presenter here at the conference today. Well done. Congratulations to your team. Renascor, where are you guys? There's a huge announcement came out of South Australia at the start of the week. Am I allowed to talk about it? They know about it anyway. Let's see. So $209 million invested to develop a manufacturing facility in South Australia. And that puts our neighbouring state firmly on track to become the only jurisdiction outside the Northern Hemisphere to manufacture primary components to supply the electric vehicle battery value chain. Geez, talking about that, I'm just thinking about that bottle of Grange out there, that $1,000 bottle of Grange. Tom, do you know anything about that yet? No, you don't, do you? You were here late. Should I actually tell him about it? If you put your business card outside at Cooper's, they've got a little competition going, and they've got a bottle of Grange worth $1,000, 2009 bottle of Grange. I was just thinking how much it sounds like I might have been nipping into that bottle of Grange. Right, back to you, Renascor. Huge announcement, $209 million into South Australia. You're going to be the only guys outside of the Northern Hemisphere. It's a project which has the potential to develop $260 million a year in export revenue. Renascor is the company at the centre of this announcement. This fellow up here is David Christensen. He's Renascor's MD. Please make him welcome and see what he may have in store for you and your investment portfolio.
Thanks very much, Chrissy. So Renascor is an Adelaide-based company developing in South Australia one of the world's largest graphite deposits. Our Sevier project is the second largest proven reserve of graphite in the world, the largest graphite reserve outside of Africa. For the last 5 years, we've been developing not only the resource at Sevier, but an environmentally friendly downstream purification technology that allow us to upgrade Sevier graphite into a purified spherical form for direct use in the manufacture of lithium-ion battery anodes. We managed to gain the support as offtake partners of some of the leading anode manufacturers globally, largely because of our location in a low sovereign risk jurisdiction like Australia and the scale and the quality of the Sevier resource, which we believe is going to allow us to become one of the lowest cost producers of a refined graphite product in the world. Quick corporate overview. Renascor trades under the ticker symbol RNU. You can see our share price performance over the past 12 months. We managed to get a bit of a re-rating earlier this year on the back of a number of offtake agreements. We did a capital raising, and recently we announced a fourth offtake agreement with the South Korean conglomerate POSCO, and that's pushed us up again. We're well cashed up. We have over 17 million in the bank at the end of the quarter, and that puts us in a position to complete all the necessary work we're going to need to do to get us to a final investment decision, which we expect to happen at some stage next year. So our plan at Renascor is to have a vertically integrated operation that consists of two operations that work in conjunction. At the mine site, we'll be producing a graphite concentrate in a traditional graphite operation. That graphite concentrate will then be used as feedstock for a downstream manufacturing facility where we'll upgrade that into a purified spherical graphite form. We then sell that on to anode manufacturers. Anode's the other side of the battery, the negative electrode. Anode manufacturers then coat that with a proprietary technology and sell to battery manufacturers. Battery manufacturers then assemble the batteries and sell them to EV manufacturers. So where we sit in the supply chain is we're in the middle. We're producing, our primary product is purified spherical graphite, and our customer base is an anode manufacturer. Quick word on the market. Graphite, like many other commodities, is being impacted by what's going on with the uptick in electric vehicles and the resultant increase in demand for lithium-ion batteries. Now, when we look at the anode demand roughly tracks where lithium-ion battery demand goes. Graphite is the key component that goes into the anode. By weight, it's the largest in a lithium-ion battery. Now, if we move one step further upstream towards what we're doing, purified spherical graphite, you can see the demand curve that roughly follows where that anode curve goes. Now, Graphite's a bit different than most other commodities because it hasn't yet transitioned into a battery mineral. It's just starting. And we try to illustrate this with the chart here on the bottom that shows the proportion of graphite concentrates that go into lithium-ion battery. Circa 2020, less than a quarter of graphite that's produced at a mine site goes into a lithium-ion battery. It's only by 2030 that graphite becomes primarily a battery mineral. Now, our strategy at Renascor is to use the graphite concentrates we'll be producing at our upstream operation as feedstock for the downstream operation. And this means we'll be moving directly into the lithium-ion battery. We'll be producing purified spherical graphite. The exclusive use for this is in the manufacture of lithium-ion batteries. So we're looking at demand growth curves of roughly 30% compounded per year. So from a demand perspective, this obviously looks quite promising. Supply. Our customer base is located in Northeast Asia, and it's dominated by China. China produces 85% of all the lithium-ion battery anodes. They account for 90% of the construction. The other two large jurisdictions are South Korea, who are dominated by POSCO, and Japan. And really, that's it. There are no current even announced plans of any of the top 20 or even top 50 anode producers to migrate their production into Europe and the United States. Now, we expect that to happen, but we want to get into production, and we want to get into production soon. So we're certainly going to cater to that existing market in Northeast Asia. And that market is currently 100% reliant on China for the downstream capacity to produce purified spherical graphite. China accounts for about 2/3 of all the graphite concentrates that are produced globally. And China is actually increasing their rate of production of graphite concentrates, but they're actually importing graphite from Africa and other countries to meet the increasing demand for graphite going into lithium-ion batteries. So our goal is quite simply to produce graphite at amongst the lowest costs of the world outside of China. And we believe, based on the quality of the product, we can be the lowest cost producer outside of China. The project itself is located on the Eyre Peninsula of South Australia. The mine will be located outside of the coastal town Arno Bay. They will have an open cut mine and a flotation processing plant to produce a graphite concentrate product. We'll be trucking that material from the mine to Port Adelaide. That's the container carrying port in South Australia, and we'll be upgrading it in a downstream operation along the way. We're going through a site selection survey right now. You can see some of the sites where we'll be doing that. The economics of our project are really based on minimizing the movements of material. We want to take the material from the ground, upgrade it, get it to port, and ship it directly to the customers. This is one of the reasons why we believe we can be one of the lowest cost producers. We're not adding logistics into the mix, we're reducing it. We're not taking material from one continent, bringing it to another, upgrading it, and then shipping it to customer. We're taking it from the mine, upgrading it, getting it to port, and getting it to customer. The other reason we believe we can be a low-cost producer is because of the Sevier resource itself. So Sevier is large. It's very large. It's one massive ore body, but it also has a relatively unique flat-lying orientation, which we try to illustrate with the cross-section here. So this shows Sevier in red, and to give you an idea of what other graphite projects generally look like, we've superimposed 3 other graphite deposits in cross-section in the 2 shades of blue and green. And simply put, graphite tends to occur naturally vertical or subvertically with a series of lenses. Sevier is a big ore body, but it's a big flat ore body with thick intersections near the surface. That translates into a low mining cost. We completed a definitive feasibility study at the end of 2019, and it puts our cost of production of graphite concentrates at amongst the lowest in the world. Probably difficult to see the other companies that are on this cost curve here. They tend to be in China, Mozambique, or Tanzania, but we're not. We're located here in Australia, and because we're in a modern industrial jurisdiction, we believe we're in the right jurisdiction to upgrade that and do the higher value add and produce the downstream product, purified spherical graphite. So we'll be looking to make a 100% Australian-made product, but we believe we're relatively unique in that we'll be able to do that at globally competitive rates. Now, one of the reasons is the chief component cost in the production of that downstream product is the raw material feedstock itself. So it accounts for about 35% of our projected cost of $2,000 US a ton. We believe that puts us competitive with the median price in China. But more importantly, we think it's going to make us the lowest cost producer outside of China. And we try to illustrate that in the histogram here. Our cost of $2,000 per ton US is shown on the left. If we were going to instead buy graphite concentrate at market price rather than rely on our own feedstock, it would cost us about $400 more US per ton. Now, over the life of the mine, if we look at the projected cost in graphite concentrate, that increases to over $1,100 US per ton. So quite simply, we believe we can be the lowest cost producer of this purified spherical graphite product outside of China. The economics really look robust by any measure. We completed a study at the midpoint of last year in producing 28,000 tons of purified spherical graphite. We have a net present value of just under $500 million US. And if anything, since we've completed it, the market only looks more robust. When we completed this in the midpoint of 2020, 28,000 tons really looked like a bit of a stretch goal. Since that time, we've entered into 4 publicly announced non-binding offtake agreements that account for up to 60,000 tons of our production. POSCO alone is looking at taking up to 30,000 tons of our production. So right now, as you could guess, we're looking at expanding it. Because of the scale of the resource, we'll be producing over the life of the mine an average of 105,000 tons of concentrate that we can use as feedstock. So we have ample opportunity to expand this. And if anything, we think there's a real opportunity to make those numbers look even more robust. ESG, we've heard a lot. This is really important in the battery space. Now, one of the advantages we see our project having is our location. For us, environmental compliance, strict environmental compliance, really isn't a choice. It's the law because of where we are. We're in South Australia, but the same would be true for any jurisdiction in Australia. We have amongst the strictest environmental rules in the world. We've gone through over a 4.5-year approval process with the Mines Department of South Australia. We have our first stage approval, our mineral lease. We expect to get the secondary one sometime towards the end of this year, the beginning of the next year. We've developed what we believe is a very environmentally friendly purification technology. The Chinese refiners, about 80% of them use hydrofluoric acid. Hydrofluoric acid is very cheap in China, but it's also very dangerous, especially in terms of getting into the water supply and the cleanup. We've managed to develop a different technology to do this that uses sulfuric acid. We believe this is much more beneficial environmentally. The other thing, it's going to cost a lot less for us to do that here. And then the other advantage we see our own project having from an ESG credential is, again, the location. We're not moving the material significant distance. We're taking the material from the mine, upgrading it, getting it into port, and shipping it directly to our customers. Our offtake strategy is quite simple. We want to sell it to the biggest and the best anode companies in the world. I've told you where they're located. We recently entered into the agreement with POSCO. POSCO is also looking at making an equity investment. We're working through technical due diligence right now and negotiating potential offtake terms. We also have 3 other non-binding offtake agreements. 2 are with Chinese anode manufacturers. The 3rd is with Hanwha, who are a Japanese trading company. We think this will get us access to the 2nd largest market in the world, the biggest market outside of China, which is Japan. And other than these offtake partners, we're also seeing inbound inquiries from other companies. So if anything, since we've produced this, the level of demand just quite simply seems to be outstripping the supply. And we believe we can be the low-cost provider, and thus the provider of choice. A quick word on government support. Our project is the only graphite project on the federal government's critical minerals roadmap. And maybe most importantly, we believe there's a strong chance we're going to get support from federal loan organizations, in particular Export Finance Australia and the Clean Energy Finance Corporation, who've given us in principle support. What's ahead for us? Well, we think there's going to be some major opportunities on the offtake front to convert our existing non-binding into binding. And again, we see more opportunity to bring in other offtake partners as well. We believe we're going to be able to increase our expansion either through a stage 1, larger stage 1 or a stage 2 production. We'll be completing our technical studies and our regulatories and continuing to de-risk it. And then hopefully next year we'll be into due diligence. And the opportunity we really see here is one to become one of, if not the largest producers of purified spherical graphite in the world. Thank you very much.
David, thank you very much. Renascor wrapping up our third session here at the conference. You're going to be out in your booth right now?
You bet.
Excellent. All right, so go out and have a chat to the man, have a chat to all of our presenters in that particular segment. 6 of you, some interesting prospects. That one particularly jam-packed with a lot of backing as well. Very impressive. We've got 5 more presentations to go through this afternoon before we get to drinks, and we'll be announcing the winner of that bottle of Grange as well. For those of you who thought it was hard getting in here this morning, we just had word there were actually 6 accidents on roads coming into the Perth CBD this morning, so it was a bit challenging. That would explain why we're all having a few issues getting in. Hopefully it'll be easier getting home after drinks tonight. Go and enjoy your afternoon tea. Thank you.